All right, so good morning, good afternoon, wherever you at. Thank you for joining my financial workshop presentation. My name is Malik East. I'm a financial agent with True Choice Financial, and within that group is my business, Seven Band Incorporated. And today I'm just excited to share with some of y'all some of my experiences and insights on money, wealth, and life insurance. In other words, financial literacy and just a little peek into the world, my world of entrepreneurship. Okay, so before I get diving into this presentation, don't worry about this being some sales presentation or you just having to buy anything. Today's not about that. Okay, this workshop is for three groups of people. You're either an entrepreneur, you're looking to open and start a business, you're looking for capital to fund for your business, or you're an active saver, saving for retirement, saving for a business, saving for your kids' education, or just safety, like a safety net for your family. Or three, you're a baby boomer, right? You worried that you're going to outlive your money during retirement. And that could be very scary. Like that could be a very scary thing if you can imagine that. Like imagine having to go back to work after you work like 40 plus 50 years and you don't have enough money to live off of comfortably by yourself, right? So if you belong in any of these groups of people, then you in the right place. Okay. So how you guys doing? And ladies, my name is Malik. All right. So just a brief background on who I am and how I got started in the financial service industry. Okay, I started my company back in 2020 out of a desire to teach and help people and help others about money and finances. So coming from a marching background, which I was in, I've been marching band for like over 10 years. It inspired my company name, which is Seven Band Incorporated. So over the years after I graduated college, left the band world, I was introduced to the insurance industry and I saw like what they were showing is stuff I didn't even know about, like money, finances, taxes, inflation, and how it works and stuff. And I just developed, like, I quickly developed an appreciation for what life insurance can work and what it can do in conjunction with other pieces of like the financial puzzle to create a more complete picture of wealth, prosperity for the rest of your life. So we can actually see that vision, right? So I fell in love with it. So I'm passionate about helping people transform the way that they think about money and escape the rat race for good. I'm not talking about just for a season. I'm talking about forever, so that you can finally reach your financial goals and actually live the life that you want to live just by using life insurance products, right? So I'm originally from Hattiesburg, Mississippi. Me and my wife, we live in Mississippi now. For now, I pledged Kappa Kappa Psi National Honorary Band fraternity, and I can play the saxophone, I can play the French horn, piano keys, even that. I can do some stuff, right? I'm a music guy. So after I was introduced to this industry, I've been helping countless clients and families secure their financial future too. And I'm just very excited to share some of my knowledge and experience it with y'all today. Okay. So as I mentioned earlier, the name of my business is Seven Band Incorporated, which is a financial marketing organization. See, we market financial products on behalf of companies like Allianz, National Life Group, John Hancock, American National, many of them Fortune 500 insurance companies. And our business model allows us to offer high cash value paying products with a more optimized design that allows our clients to use their policy for cash value when they need to borrow from it while they're alive, so that they can, pretty much have their own bank. So our clients, they love it because they can get the minimum death benefit that reduces the cost and fees. They either regular fund their policy or they max fund it so they can get the growth accumulations in it. This also reduces the agent's commission. All right. That way that our clients can grow way more money risk free with a more optimized design than the average design than the average agent would do. So our clients, they like I said, they love it. They can access their money tax free without affecting the growth on their policy. All they got to do is hit up the phone, call the insurance company, and about I think because I had did it too about 3 days later, wire transfer or electronic transfer, the money's in your account, right? So the issue that I found being an agent in this industry is that the average agent is a 61-year-old white male. Now, nothing wrong with being white, being 65. I'm not racist or nothing like that. But if that's the average agent, y'all is 65, then who he's marketing to? He's marketing to other individuals who's like that's in his age range and who the ones being left behind. People like us, women, millennial, Gen Z, Gen Xers. And I believe that that right there, that financial gap of knowledge right there is a problem, okay, that needs to be addressed. And as a result, I made it my mission, kind of like my purpose, to empower these groups of people and provide them with the tools and resources that they need to succeed in today's economy. Okay. So as an entrepreneur, man, we get paid based off the size of the problem that we solve. Right. So we're solving three major problems in my community here at Seven Man Incorporated. And the first one is distribution. Y'all, I don't resemble the typical agent in my industry. Like, come on, I'm black, I got dreads, and that means that I have access to a market that that average agent is going to have a hard time getting into. I'm able to teach people who look, talk, and act like me about money and finances. Whether you a woman, whether you a Gen Z, you're Gen X, or millennial, you able to get the same education that the other class of individuals can get. You can get it here. So that's the first problem that we're solving. The second one is financial literacy. Like I said, we don't learn how money work in America. Not in school, not in college, and unfortunately, most of us don't even learn at home. So what happens? We make mistakes in our 20s and 30s with some bad money advice, try to recover in our 40s and our 50s to just get back on track in time for retirement. That's not the best wisdom, but that's just all we know. So I teach financial literacy here. What's tax exemptions? Tax codes like 7702, 101A, 72E, how they help with tax-free growth on our hard-earned money, right? How can you protect your hard-earned money that we make from our paycheck every 2 weeks or every month, or we get paid every first of the month and in the middle of the month? How can we earn our money and fight inflation? How can we fight back on taxes, right? What's infinite banking concept? How to become your own banker, right? Financial tools that we don't be hearing daily in our communities, in our neighborhoods, around our friends. I talk about it and I teach my clients here at Seven Man Incorporated. And last but not least is just entrepreneurship. Like, I don't care how old you are in America, okay? If you saying, Malik, I want to open up a business, man, then the first thing I'm gonna let you know is that you gotta attract two of the largest generations. And they're called the Gen Zs and the millennials. And to be honest, we different. First, we gotta know that we was born between the 90s, I think 1981 to 2010. And most of us, we don't want to work a job for 40 plus years for a 401k. That's probably not even going to be there when we retire, right? We want to travel. We want to live our best life. We want to live in our purpose, get paid what we're worth, make an impact on our community. And the last I checked, that's hard to do behind a desk or a kiosk, man. It requires some entrepreneurship. So who out there teaching entrepreneurship? No one really. You know what I'm saying? So if you're wondering, okay, cool, man, Malik, you made a great introduction, like how you solving these problems, right? So one of the first concepts that we teach here at Seven Band Incorporated, guys, is truly about money, but not just money. Y'all, more importantly, how does money grows, right? So I don't care how much money you have or how little you have it. Your money is going to be growing three different ways. Okay, it's going to either be growing fixed, variable, or index. And this is one of the first concepts that I teach my clients involved in my workshops or when I be speaking with them. This is what the first thing I be teaching them. So there's pros and cons to each way that money grows. And when it works right, there's a plus. If not, it's gonna be a minus. Okay. And the first one we got is fixed. What's fixed? That's gonna be your bank account, checkings account, savings account, CDs, that's a certificate of deposit, money market accounts, and that shoebox that y'all got upstairs with them ones or them hundreds in it. I'm just messing. I'm just messing with you. But some people, they still have that money in their shoeboxes upstairs. Okay. So what's the plus to putting that money in that shoebox or putting that money in the bank? Is that it's safe. The bank is backed by the FDIC for up to $250,000. That's $250,000 that you keep in the bank is safe. But what's the downside to the bank? Keeping your money there is not good for the long term. You get low to no growth on that money. So if you got a lot of money, like $10,000 or 20 or whatever, and it's just sitting in the bank, over time, it's not doing much. Okay, it's not doing much. And one of the biggest challenges that people be facing when they store money in the bank for a long period of time is something called inflation. So inflation right now, I think is currently around 8.8%. So if you got money in the bank like that, a lot of it, you actually losing money saving it in a bank for the long term. Now, just looking at it on a growth chart from here, you got slow growth over time. It's not the best place to actually keep money growing for a long time, but that's all we know. That's just as a lot of us, this is all we know, right? Then the second one I got here is variable. Most of my clients that I speak with, they have 401ks. Some have cryptocurrencies. They be buying individual stocks. That's great to have. That's cool. And the plus to like owning your own rental property or having some stocks in Apple or having that 401k is that you can experience some growth on that money. Now, what's the downside to sometimes owning real estate that they don't be talking about, or having stocks of that 401k that nobody really be talking about, is that what goes up at some point must come back down. So you can lose all or a portion of your money in a variable account, right? But the real question is, how much money can y'all afford to lose, or can we afford to lose? And most of my clients that I speak to, they always say they can't afford to lose none, right? So that leads us over here to index. The last one here is index. Now, index is not as popular as a fixed or a variable account. Why? Y'all remember when I said that the average agent is marketing in these index right here products is not really reaching all the markets, because most of my clients, they never heard of it. They're called annuities and they're called IULs, index universal life insurance policies. Okay, these are both insurance products. And if you don't know, insurance has a disposition to not lose value. So you have a contract saying you're guaranteed to never lose money in this account. So the plus is it's absolutely safe. It's just, that's kind of obvious. So what's the catch? Everybody always be thinking, what's the catch? There's got to be a catch, right? So the catch is it's usually capped on growth. And I'm gonna use this simple example here of like 0 to 9%. And what that means is you won't get below 0, you won't lose any money, but you won't get above 9%. That's the ceiling, that's the limit. Okay. The cap is 9, the floor is 0. So you always stay in between. Okay. Now, when I say index, I mean that your policy is linked to the growth of what we call the S&P 500. Okay. Think of this like one big cup with some of the most popular stocks. I'm talking about from American Express, Microsoft, Apple, Tesla, Amazon, Netflix, all these big name brands in one cup. And the S&P 500 measures the growth of all of those. Okay, so let's imagine you say, Malik, I want to grow some money tied to the performance of Walmart, bro. I want to tie some, tied to Coca-Cola, these big brands. See, you can do that here with IULs. That's something they're not going to tell you neither. Now, let's say the S&P 500, after measuring all these stocks 1 year, was up 20%. Pretty good, solid year. Knowing that your IUL is linked to it, you now got 9% growth added to your money. And the downside is you only capped at 9%. Now that's way better than the bank. Now let's say the following year the market was up 8%. Again, you're gonna get 8% added to your IUL. Now let's say what happened back in 2008, right? When the subprime loans that caused the housing market to crash, and the market was down like negative 38%, you would lose 0. 0 is like your hero over here. You don't lose any money in the index. You just don't gain any growth or nothing like that. Now, here's how I look on a growth chart. When the market is up, you're up. When it's down, you're flat. When it's up, you're up. When it's down, you're flat. Most people call it the stairway to heaven, but it's like you compound positive gains on top of positive gains, and anytime it's negative, you're good. You lock in your growth over time and you keep your money safe. Imagine keeping your money safe over the years when the market crashes, but your stuff is good, right? So looking at all three of these, if you had an opportunity to grow your money for your family future, for the down payment of a house, to invest in real estate, college for your kids, retirement plan, trust fund, whatever it may be, where would you put most of your money for the long term? See, now most people they say banks, some say 401k, Roth IRA, and most of my clients, they say index. Now, me personally, I believe in all three of them. Okay. Now, if somebody be saying like, man, put all your eggs in one basket, I'ma just let y'all know right now, be careful of that dude or that woman. Be careful of that person. Okay, because when it comes to fixed accounts, we enjoy the safety. We work hard for our money. I know I do, and nobody want to lose money because of what? Inflation, because of taxes. Nobody got time for that. We also don't like to keep our money there for a long time because we don't like to get low growth on our money, right? So what should be in our bank account? Personally, I say anywhere from 3 to 6 months of your monthly expenses. Like whatever your bills are, add that up times three. That's what you want to have in your bank just in case of any emergencies. Okay, now when it comes over to variable accounts, we enjoy that growth on that 401k. We love the company match, the growth of it from the market. We love to see that stuff, cryptocurrency. We love to see it go up, or stocks. We love to see that stuff, but we don't like losing all or a portion of our money. That hurts. I don't like that. I know some of y'all probably don't like that neither. So if you're close to retirement, just imagine this: if you're close to retirement door and you lose half of your money for retirement, what you got to do? You got to work like 5 more years. You know. So now we move over to the index. Your money's safe, downside protected. It's like you got best of both worlds over here. So there's this guy by the name of Warren Buffett, man. I be reading his books, and his name is Warren Buffett. He's a financial guru. And if you've ever read any of his books and articles about money and finances, he got two rules every time he talk about it when it comes to money. Rule number one, don't lose money. Bet, check. Rule number two, just don't forget rule number one. If you like me, growing up, man, most of us, we didn't really was taught about money this way. All we knew about banks, 401k, that's all we knew, right? So let's imagine we got some money today. Let's imagine we got $10,000, right? And we put that $10,000 in this IUL, and that market dropped down to negative 38%. We still gonna have $10,000. Okay, you lose nothing. But if the market went up 9%, we just gained an extra $900 just by placing our money there. And if we place that $10,000 in the stocks and it dropped down negative 38%, we would have lost money. We would be down from $10,000, we would have dropped down to $6,200. And whenever the markets be dropping, you gotta do twice as much money just to get back to where you left off. And that's why in most important cases, not losing money gotta be way more important than just making money at some point. So as I wrap it up here, guys, take this question home with y'all. One, what you currently have? How you growing money for your family? How you saving money for your family? 9 out of 10 of my clients, they say that they own a bank account or a savings account. Question number two, do you currently own a 401k, a pension, a stock, anything like that? 9 times out of 10, most of my clients, they do. They have retirement accounts. And then three, do you currently own any annuities? That's the last question. Do you currently own any annuities or IULs? And most of my clients say no. And when I be asking them why, they be saying, Malik, to be real, I never heard of it before, bro. So if that's you and you saying and you thinking to yourself, man, Malik, I never heard of an IUL or I never heard of an annuity before, but this do sound a little interesting and you open to like learning more about it. Very simple. What we're gonna do is we'll just set up an appointment. We're gonna ask some really basic questions on how this IUL and how this stuff can work and how it can fit for you. If it's for your retirement, it's for savings, or if it's for your kids, are you trying to have a trust fund? And we can potentially bring wealth for your family because the East family, me and my wife, we're good, but I'm just trying to make sure like we're good for generation to generations. I'm just doing it now to make sure that I can spread that same knowledge and wisdom and abundance to other people so that your family can be good generations after generations. Does that make sense? All right, cool, cool, cool. So that's it, man. That's it for today. That's all I got. Thank you guys for joining me for this presentation. And if you have any questions or would like to learn more about it, my phone number right here, my email right there. You can also reach me out on Facebook, Instagram, LinkedIn, anywhere you can just reach me out and just feel free to contact me and I'd be glad to assist you guys. And I look forward to hearing from you and helping y'all achieve y'all financial goals. That's it. Take care. Peace. I love you. If you guys have any questions, please leave them in the comment. Please just email it over to me because I got to run. I got another meeting to go to. Thank you guys for stopping by. Talk to you later.